Hello friends, and welcome to my YouTube channel Simply Talks. And today I'm going to talk about a comparison between Dixon Technology and Amber Enterprises. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about the comparison, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up on short-term, long-term market calls and stock calls. And if you pay $100 upfront, then you get 20% extra. That means by paying for 10 months, you get 1 year access. For detailed market or company talk, you can directly contact me on email and we can work things out with a fee. Now about the industry of both Dixon Technology and Amber Limited, electronics industry has picked up in the last 5 years, and we've seen how the industry has done extremely well, as you have other kind of products, be it in lighting, be it in electronic items like mobile phones and televisions, and how things have changed across India. So pickup started with a number of government schemes also from 2014, Make in India scheme, etc. So government has also helped a great deal in bringing forth this industry to the core, and now we are having at least two of the businesses that are listed, which are directly a play on the electronics market with LED lighting, mobile phones and LED televisions, etc., and ACs. Pandemic made things better for these companies. So ironically, pandemic helped these companies in a way that there was work from home, people were staying more at home and renovating their home, so were buying better products for their usage, and that's where the LED televisions and the LED lights and the ACs, etc., came to being, and people started buying them, and these companies shore up their revenues and profits in the last 1 or 2 years. It is a unique work from home place that have worked out. Yes, industry is going to, or things are going to open up, economy is going to open up. So one of these companies may have a situation where sales may dip, and we'll discuss about that. But at the moment, what is it seems like both the companies are producing very good numbers. The PLI scheme has been another booster for the industry, and through which a lot of you can say tax incentive that these companies are getting. Although right now the benefits have not gone through, although the scheme is into place for a few months already. But I think over time you will see the numbers improve significantly with the PLI scheme getting shape in a big manner. So set to grow at greater pace as demand will only surge going forward, and we'll see that once things get better. I think demand will surge once people have more jobs and people end up earning more. Then you'll see that both the companies will have a greater amount of sales. Second and third tier cities, of course, will end up doing well. See, the metros already have most of the bases covered, and we have seen that how the items are already in place in most of the houses. But second and third tier cities are way behind in terms of the penetration of these electronic items, etc. So hopefully those will be targeted over the next 4 or 5 years, and that's where this industry is set to grow even further, because the penetration of products are extremely low in India. Penetration of LED smart televisions are still low. Penetration of LED lighting is still low in rural and semi-urban areas and second and third tier cities. So I believe that going forward things are only going to get better. Coming to the comparison of both Dixon and Amber, if we look at it, so the market cap of Dixon Technology is around 25,000 crores, whereas for Amber it is around 10,000 crores or so, just above that. But you look at the margins, operating profit margin of Dixon is around 4%, Amber it's better at around 6%. But you look at an ROE, and this is one of the most important, you can say, features or metrics when you consider a stock or a company. Return on equity of Dixon Technology is 25%. It has dipped from 30 to 35% earlier, so it's still staying at 25%, whereas for ROE for Amber is around 6%. And this is one of the few reasons why Dixon is trading at such high valuations compared to Amber. Both are at 2.5 2.7 times market cap to sales, so there's not a huge difference. There is around 39% institutional holding, 29% institutional holding in Dixon, and there is around 35% institutional holding in Amber. So there is where Amber, because, and I believe this is because of the better valuations in Amber at the moment, that institutions are more invested there. So if you look at return on capital employed, that's where also Dixon trumps Amber with 32%, and this is where they have been very efficient, the management, when they normally they do not expand so much or bring up capacities that easily, but when they do, they know what kind of revenues that capacity is going to produce, or when they are going to get into break even, etc., and it's going to be quick. And that is why return on capital employed is around 32%, whereas 9% for Amber. There is more than three times. And you look at it, the effect is on the stock price. The stock is up 70% in case of Amber in the last 1 year. The stock is up 170% in case of Dixon Technology, and it is mainly because of this ROCE. And if we look back, it is because of this ROE. And this is a greater point of, you can say, reference for anyone who wants to invest into such companies which are more consumer centric. Return on equity being 25%, ROCE being 32%, is quite phenomenal for such a business, which was around recently around 3 4 thousand crore market cap, and over the last 2 years it has grown to around 20 25 thousand crore market cap. The PE, as I mentioned, is 140 for Dixon compared to 85 for Amber. And this is because the market is giving higher premium to Dixon because of the kind of bouquet that Dixon has, because of kind of products that Dixon has, whereas and the fact that they are having a higher return ratios. So in a nutshell, Amber look reasonable relatively and trades at better valuation, but you need to understand Dixon is a market leader in this space. They have better products and a number of gamut of products. It has a number of industry that they work in: LED lighting, they have LED televisions, they have gone into even RT-PCR kits, they are into medical devices, they are into of course they are big time into mobile phones, and they have Xiaomi as their television partner. So a lot of business is going to come through, and that is why people are looking at 2 3 year down the line what kind of sales the company is going to produce. The sales growth have been phenomenal in Dixon. Amber's business is more seasonal in nature because Amber more looks at ACs and AC components, etc., and manufacturing AC, and that has been absolutely massacred over the last 2 years because of the kind of, you can say, a shutdown of the businesses we have had during the summer. So probably Amber has better valuations, and once the pandemic ends, Amber is going to perform even better. But at the moment, Dixon looks like continuing its run with the higher PE that we are looking at. But business front, both may do well as things open up. So my call is very difficult to choose between the two. Probably Amber more attractive in terms of valuations, but I believe in buying the best, and I still believe around 4,000 4,200 Dixon is a better prospects to get into, but only take small positions into these stocks. So this was a video on Amber versus Dixon. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. And kindly support me on Patreon. Thank you.